Cilia Flores, in a precise overnight raid on their fortified residence in Caracas. In a detailed statement delivered early this morning from Mar-a-Lago, Trump described the mission as a resounding success, commending the bravery and skill of the operatives involved. He further outlined a clear roadmap. The United States would assume temporary administrative oversight of Venezuela to ensure security, prevent chaos, and facilitate a smooth transition toward free and fair democratic elections. This development represents a pivotal turning point in international relations and resource geopolitics. Venezuela holds the world's largest proven oil reserves, estimated at over 300 billion barrels, surpassing those of Saudi Arabia and Iran, combined alongside vast untapped deposits of gold, coltan, and rare earth elements essential for modern technology and defense industries. For years, these resources have been heavily influenced by adversarial powers, particularly China through massive loans for oil deals and Russia via military and economic support. With Maduro's removal, that influence wanes significantly. Trump explicitly stated that previously seized Venezuelan oil shipment, totaling millions of barrels in recent weeks, would remain under U.S. stewardship. We will retain these assets, he noted, either integrating them into our strategic petroleum reserve or directing them toward market stabilization. More ambitiously, Trump signaled that leading American energy firms, industry giants with unparalleled expertise, would lead a comprehensive rehabilitation effort. Billions in private investment are expected to flow into repairing dilapidated pipelines, refineries, and drilling sites, neglected under years of mismanagement and sanctions evasion. The stated goals extend beyond mere extraction. Restoring full production capacity could add millions of barrels per day to global supply, enhancing hemispheric energy security, creating jobs, and generating substantial revenue for reconstruction. Analysts project this could ease persistent supply constraints, potentially lowering global energy prices and contributing to broader disinflationary trends in 2026. The operation's strategic timing, launched late Friday into Saturday, proved masterful from a market perspective. Traditional stock, bond, and commodity exchanges remained closed for the weekend, allowing institutions and retail investors time to process the news without knee-jerk reactions. Futures markets showed initial volatility in oil contracts, but overall sentiment stabilized quickly. In contrast, cryptocurrency markets, decentralized and operational 24/7, provided an immediate real-time barometer, rather than the sharp, fear-driven sell-offs witnessed during prior geopolitical shocks, such as escalations in tariffs, regional conflicts, or pandemic-era uncertainty. Bitcoin exhibited extraordinary composure and strength. Following the first headlines around 3 a.m. Eastern Time, BTC experienced only a modest initial dip of less than 2%, quickly absorbing selling pressure before reversing course. By Sunday evening, it had reclaimed losses and pushed firmly into the low $90,000 range. With intraday highs testing $93,000, volume remained healthy without extreme spikes and liquidations, and funding rates stabilized, positively clear indicators of underlying demand rather than capitulation. This resilient price action marks a stark departure from patterns in previous cycles. Historically, macro uncertainties triggered cascading long liquidations, amplified drawdowns, and extended periods of risk aversion across crypto. The current response suggests profound market maturation. Dominant holders are more conviction-driven. Leverage levels have normalized post-2025's excesses, and institutional participation via ETFs provides structural support. After the euphoric highs exceeding $120,000 to $126,000 in late 2025, fueled by spot ETF approvals and policy optimism, the subsequent correction proved severe, erasing trillions from total market capitalization through a series of liquidation cascades. The past 4 months have embodied a textbook bottoming formation. Repeated probes of lower supports shook out marginal buyers, while waves of over-leveraged positions were systematically flushed. Early cascades wiped out 20 to 25% of open interest, followed by secondary waves of 15 to 18%, and final cleanups around 8 to 10%. Volatility compressed, trading ranges tightened, and sentiment reached extremes of apathic hallmarks of exhaustion among sellers. Short interest, meanwhile, accumulated to elevated levels as contrarians bet on further downside, setting the stage for potential squeezes should momentum shift. From a technical standpoint, Bitcoin now approaches several confluence zones of significance. The price is reclaiming intermediate moving averages while eyeing the 50-week simple moving average. It's positioned near the round $100,000. Psychological barrier, a level that has acted as dynamic support, resistance in prior cycles. A decisive weekly close above this threshold, followed by a healthy retest, would provide strong confirmation of trend reversal. On-chain metrics corroborate this setup. Long-term holder accumulation has resumed, exchange outflows persist, and realized profits remain subjudicating. Minimal distribution pressure from veterans, historical analogs reinforce the bullish case. Following major resolutions, whether tariff de-escalations, dubbed Liberation Day phases or stabilizations after geopolitical flares, Bitcoin has repeatedly embarked on powerful impulses higher. Renewed risk appetite drives rotation into beta assets, while flight to safety flows favor scarce, verifiable stores of value. In this instance, the event's resolution-oriented nature swift, low casualty. With clear U.S. objectives, minimizes prolonged uncertainty, potentially accelerating recovery. Broader macroeconomic implications amplify the opportunity. Enhanced access to Venezuelan output could meaningfully augment global oil supply over the medium term, alleviating bottlenecks that contributed to inflationary persistence. Lower energy costs ripple through transportation, manufacturing, and consumer prices, providing central banks additional latitude for accommodative policies. Concurrently, the operation vividly illustrates inherent risks in traditional fiat frameworks. Arbitrary sanctions, asset seizures, and centralized custodial vulnerabilities. Such demonstrations historically catalyze interest in non-sovereign alternatives. Seizure-resistant digital assets like Bitcoin, Venezuela itself, offers a poignant case study. Years of hyperinflation under Maduro drove one of the highest crypto adoption rates globally, with citizens turning to Bitcoin and stablecoins for preservation and remittances. Reports of regime-held cryptocurrency wallets potentially substantial to circumvent sanctions at intrigue. Any disclosure or integration could introduce notable supply dynamics. In this electric dawn of 2026, amid evolving global order, the cryptocurrency market signals quiet defiance against turmoil. Traditional havoc often breeds extraordinary opportunity in decentralized realms. The bullish flip appears underway not amid euphoric speculation, but through measured, conviction-based ascent. Market participants would do well to remain vigilant. Monitor upcoming traditional market openings for cross-asset correlations. Track on-chain flows for confirmation. Position according to personal risk tolerance. Ultimately, events of this magnitude remind us that macro backdrops are fluid, often rewarding those with patience and perspective. Whether this catalyzes the anticipated parabolic phase or merely a strong bear market rally remains to be seen. Yet the structural underpinnings, maturing infrastructure, institutional embracement, and Bitcoin's evolving role as digital gold suggest the path of least resistance trends upward. Stay informed, decide wisely, and navigate purposefully. This analysis serves merely as perspective to illuminate your own journey through these transformative times.